Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to take a look at the thing that started this whole thing. I posted in there is the 4-hour chart of the the DAX, the German DAX. You'll notice it has a 3 drive to a bottom pattern, but the key here is it opened at the 78% level, and it stayed there for about an hour. Folks, believe it or not, Tom Hugard was in there for buying like crazy, putting a stop right below that. I mean, it's unbelievable. What a day he's had over there. There was 2 key things that were happening in the market last night, in my opinion, that were very, very important. One was the fact that this DAX did open right at the 786 and didn't go any lower. That, if you believe in Fibonacci numbers, that is very important. But there was another one, the one that's been, kicked around by everybody, and that is the crude oil. And the thing is, this is one of the things that we featured in our letter this weekend, is watch to see for a market that has really bad news and good action. And here you've got this is a 15-minute chart. You'll notice the 3 drive to a bottom there at 2100. Spot on, perfect ABCD, just a nice double bottom. Very, very bad news. And, it's only down about $1. And then all of a sudden, boom, it's up on the day, and now it's roughly $2.50 higher than that. Of course, we followed that very closely last night and was able to take a nice look at it from a shorter term perspective, so you'd be able to understand what you were doing. As a matter of fact, what we did was we tried hold on one second here, if I can get this up here. Oh dear, having a little chart problem here. I have to bear with me a second till I get this stuff working the right way, and then we'll be okay. All right, now today's high in the S&P at 2380 was a 61% retracement of the high we made just the other day on one of those rallies. So watch that 2380. We get above 2380, we're going to probably be up for a couple days. We could get a 3-day rally from here. We were at as we recalled, we were right at that really critical level. In all of these things on Friday, we closed right on the low in the S&P, and I do believe that this is, folks, this is a long way from being over, but we're going to have some fun in between for sure. The gold and silver held exactly where they had to be. They held up just absolutely perfectly above those 1465 level in the gold, and $12 and roughly $12 in silver, so that's acting pretty good. Also, another one that's looking good last night was the copper. Larry, hold on one second. Low on Apple was I thought the low on Apple was 229. Ruby, that's what I thought the low was. I was looking at that 225, and it looks like they're going to reverse that. Yeah, 225 was a pretty good number, but that's $4 lower than the 618. So maybe this is the major bottom. If it is, I'll be surprised. But folks, I'm surprised a lot. So we'll do one thing at a time here. But the commodities are the thing that I think starting to look really, really interesting. And starting with crude oil, the fact that they have all this news about single-digit oil and all this stuff, and they couldn't even knock it down last night. That was the first indication that the darn thing just did not want to go lower. Let's take a quick look here at the Apple so that I'll be able to verify that that's what I had, because I did this. I'm not showing that. Let me give you the number here. You'll be able to see it here. Oh, wait. Oh, pre-market. Okay, yes. All right, pre-market. Yeah, I could understand that. But you can see there's that 61% retracement right there at that. That would have been right at the roughly 230 level, and it looks like it's going to open above that, which is good. And this is a weekly chart, so this should hold up. My fondest thing is that the people in the news just stop beating this thing up. Now, I'm gonna share with you what's happening with this virus thing. It's a mathematical thing, but I think it's important to pay attention to. I covered this. John Jameson helped me with the letter, and he covered it. But let me just show you the. This is the numbers in the thing. This is for the United States, folks. Okay, 3 weeks ago, we were at 8,700 infected. 2 weeks ago, we were at 17,400, and now we're at roughly 34,000 is what we're running at. Okay, now what that means, if you look over on the right over there where it says 6, this means the market, these infected things, doubles every 6 days. And it's going to do it for a total of 91 days, which means it's going to be 15 iterations. So next week, we should be at 70,000, then at 139, and then at 278, and then at 556, all the way down here till in about 3 months, we're going to be sitting at 142 people of the 338 million we've got here. So just under half, around 40% of the whole people are going to get infected with this stuff. And if 1% die, you're looking at 1.4 million people could die. The only way that we can change this, boys and girls, pay close attention. Stay away from everybody else, for God's sake. That's what you got to do. That's basically what you got to do. You got to stop it. So if you stay away from everybody else, you're going to be just fine. Also, folks, I found a great way to make a little extra money during this time with the people in the houses all the time. We've got a whole bunch of old people up here in Tucson. They have the carryout service for all these restaurants. And so Sarah had a great idea as we go around to all the neighbors and get their orders and everything. And because they don't have computers, we can add $5, plus we can add a travel thing, plus we can add the tip, and we add the tax. Man, we're making big bucks. The problem is they don't get up till noon, and we'll only be able to do 2 meals a day. So what are you going to do? Try to help the restaurants for the thing, because they're really struggling, and it helps a few people stay employed and stuff like that. But it'll still be okay when we're done here. But it's going to be a while, folks, and it's going to get a lot worse before it gets ever. I just got hit in the head. I was joking about that, folks. Anyway, we did do we had some fun with some of our neighbors yesterday. Okay, let's move on here. We don't go out. We're staying home. The one good thing is I'm going to be sending out more and more charts and stuff, so that'll be fun, and we'll see how things are going. If you bought that crude oil in that pullback that we suggested, beautiful Gartley there, right below 22 cents, $22 a barrel. It's moved a couple grand, so that's a good thing. And I wanted to show you the Dow Jones, because this was right before the report. We were getting ready to send this out, and just this is what happened. I sent it out. Look what happened. This was in 4 minutes.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I wanted to get back to this crude oil for just a minute here because I do believe crude oil is going to go a lot lower. But here's where we were last night. You'll notice we made that beautiful 3 drive to a bottom down there. That was the first sign that the market was had really, really bad news, and it limit down in all the futures, and this was trading higher. That was a good sign. But you'll notice that that C wave right here repeated itself again at this 2340, and then we were looking for a back off into the support just right at that 2200 level, and it fortunately pulled back there, and then it had a little rally. Now that's nothing more than looking at a market that is getting extremely hit with bad news, like we were doing in the futures today, but it was reacting a little bit better. I mean, somebody at some point had to know that this was happening because futures came off limit after about 2 or 3 hours last night, and then it started to bounce around, as you could see from the charts. And then, of course, right before the open, they came out with the news that they're going to flood the gates. Folks, when they do this, this is what's going to happen down the road. They're going to be pumping money into this, and that means that there's going to be more money chasing fewer goods, and that's called inflation. And that's why, you have to own a little bit of gold and a little bit of silver. And if gold and silver fail, if gold goes below 1450 for some reason, for heaven's sakes, you do not want to own that because it could drop another $200 very, very quickly. And also watch the silver. It's got to stay above that 1177 an ounce. That's the 1.27 on the long-term chart that we're looking at. Yes, the Bitcoin had a pretty big run last night. It's, I believe it. Yeah, here it is. Get up here. It made a beautiful 1 point. If you like Fibonacci numbers, and I know some of you guys do, you'll notice here that just the other day here, on the 13th of March, it made a 1.618 expansion of the low that it made, way back in December. And you'll notice that one was a 1.27. So that completes a giant ABCD. And remember, that old low we had back there was at 3,300. So that is held twice. That is held also. So that's another one that looks extremely interesting. I'm hoping to have Stan Harley as our guest later on. and I'm hoping to. There was a chance that we might have Shane Smolyan on this morning. I'm doing my best to see if we can get him on. I've been trying to see if we could do it, and and we'll see what's going to happen, and we'll go from there. Someone's asked how are things in Hong Kong? They're actually much better. Only 4 people died from the virus in Hong Kong, but they're still wearing masks, and a lot of people are still not going out, but it's getting a little bit better. And speaking of Hong Kong, folks, we look at these patterns, and sometimes, we don't talk about Hong Kong, but we certainly have it on our minds all the time. But take a look here, folks. This is an important chart that we've had focused for our friends over there for a very long time. And look at that action last week. Now, last night, starting out, we were down about 1,000 points. We were down to that 21,800 again. The low we made was 21,100. That was last week. So we've held that low, but this is a weekly chart. And look at the double ABCD patterns there, folks. This is a monster potential bottom here in Hong Kong. This could be the buying opportunity that people are looking for. So we must remember that there's a possibility of that. And that's a very, very interesting chart. And we've been posting that for months. And so it finally got to the bottom part, and we'll see if it's going to hold up, and we'll do one thing one at a time for sure. Okay, the next one we wanted to take a look at would be the shucks, what did I do with that darn chart? Doggone it. Oh, by the way, those things on the mathematics behind that's been published by a few people. I believe Johns Hopkins does it, but it's been the virus has been doubling every day for 6 days. So that's what the numbers come out to. But if you stay in the house like they did in Hong Kong and they did in China, this is going to be a lot faster and a lot better, and we're going to be immunized, and it should be okay. So let's keep in mind. Now, remember the U.S. dollar has had one heck of a run, and we've had a little bit of a pullback in it today, and I'll just try to get it up here to show you why that might possibly be. If we look at this U.S. dollar here, hold it. Let me say, Dennis is saying on Friday, Larry said there would be great buying opportunities. When did he meet over the next? He thinks they were the. I didn't give any buying. No, I have not said any buying yet. No. This might be the best buying opportunity ever, but I don't see that right now. No, I do not. This is different. Hold on. Let me show you. This is the chart. This is the dollar index. You see, we've got a double top up here at that 103, 104 level. That should be enough to do it. But hats off to look at Tom O'Brien back here in 2011. You see the big ABCD pattern forming down there with the thing at 72. I think it was around 73 that he became bullish on the King dollar. And look at it. It went from 73, doubled in price. Well, not quite. Went up to 104. And it's still going. So we'll see if that's going to happen here. The problem is some of the people are not socially distancing themselves, and that's the real problem, folks. If they don't do that, those numbers are going to go up to those levels right there, and a lot of people are going to die. And it's just that simple. But these young people, I can understand it. I never went to a spring break because I worked all the time. But son of a gun, this is really serious stuff, folks. Hey, I don't know if it's bio warfare or anything like that. All I know is that it's not good, to do the things that the doctors say you shouldn't do. And, getting out in the crowds is one of them. So let's not do that. We have to wait and see. Remember the last on the S&P is what, 2297? Well, at 2380, folks, that was a 61% retracement of the high of yesterday. Now, these numbers are still working. So I still believe that the forecast that we're looking for is going to happen. I'll bring it up here, and I think it'll happen probably within the next 2 or 3 weeks, and that is, we're looking at around 1875, in the S&P. That'll be down 40%. That would be equal to what we had in the big break in 87, and also I forget one of the others, but those are the things that we're looking at. But we're going to have some great moves in some of these things. So, keep your powder dry and get ready, because when they come, they're going to be fast and furious. So we'll see. If you did do that crude oil, you certainly want to lock in some, and it's got a heck of a run in it right now, so it already would have made $1,500. So I would have certainly looked at that, but we'll watch it here. Also, excuse me one second. Wow, the S&P came off quite a bit. Let me get this up here so you can see it real quickly. I will show you that the retracement here, and you'll be able to take a look at it. Hold on just one second, and then we'll get it up here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Shane Smolyan, the Wolf Trader, with us. Shane, how are you this morning?
Good morning, Larry. Can you hear me?
Yes, sir. I certainly can.
Good morning, everybody. So I'm doing well.
Tell us, what do you think about the virus? What's going on? Can you give us an idea?
Sure. Before I start with that, I just want to go through a couple charts here just to show everybody. We do cover 10 markets, And these are a couple of advantages right now that we have on. The first one is natural gas. And when I talk about an advantage, I talk about the MACD with that solar cycle. So this red line here represents the length of time that it's been in the advantage to the downside. So that's been a nice move. Copper right here, you can see on the 17th that this also came into a nice downside advantage. But one thing I'll point out is that copper is going to change character on the 24th, which is tomorrow. And I believe the S&P is changing today, which I'll get to in a minute. But that's also been, we've also had some nice advantages on copper and silver. Silver is an interesting one too, because we caught that move down. A lot of those moves down, you can see with these red lines here. These were the advantages when you had the tape with the solar cycle, and we're actually in a little tiny upside advantage right now on silver. So we'll see how that one works out. But these markets have been relatively orderly in this whole mess that we've had with the S&P. So just wanted to point that out, that these other markets are performing very well in addition to the S&P, which is what we look at as a primary focus. Now, this is the Corona update here. These are two lines that I use to model the outbreak. These are just polynomials. This is a 4th degree polynomial. This is a 3rd degree. Now, this spread has narrowed a little bit here, which is showing a little more agreement now that we are in a sustained outbreak, in essence, of this 339,000. But we have to keep in mind that this is also, there's a lot of people that are already positive that are testing now as we get more tests. So this is somewhat of a lagging number. So we got to remember that when we look at this virus. But definitely self-quarantine is the best mode of action. Also, the HWO just announced that this virus can be airborne. And I've had talked about that before with the SARS virus, that this is a coronavirus like the SARS virus. And the SARS virus had a history of traveling through dust storms through Central Asia. When there's particles in the air, it can travel. So I think that's something that we're not quite sure about yet, and they're actually acknowledging that that's true. So the primary mode is, of course, touch. Transmission is through touch. But if it follows other types of coronaviruses, why wouldn't it follow the same pattern? And it appears that it is. So not meaning to alarm anybody, but I'm just pointing that out, that that's actually announced now by the World Health Organization. Now, I have identified the astrological, what I believe to be the astrological meaning behind this. This is just a phenomenal chart. And the reason why I started looking at this chart is I'm a Uranian astrologer, which is a type of astrology that uses midpoints, and it uses 8 additional planetary aspects, planetary orbits. They're called trans-Neptunian points. And we look at midpoints, and these midpoints have to be very precise. They have to be within 1 degree to be accurate. And when we're looking at something that affects the world, we're always looking at the Aries point. That is like the textbook definition of the world in astrology. So something this big will definitely show up in the charts. And so when I started looking at that Aries point, I realized that here it is right here. We have Saturn at Admetos. This is a very, very powerful midpoint. Anything that involves Saturn as a midpoint, Mars, Saturn, Neptune, Saturn Admetos, when this midpoint strikes, it's very slow, okay? Because Admetos is a trans-Neptunian point that's further out beyond Pluto, and Saturn, of course, moves very slow. So this actually hit the world, the Aries point right here, 0 degrees. You can see the symmetry here. This hit on 312. Now, the sun came across, and it actually hit that 0 degree spot on 320. So the sun represents the day. So anytime the sun comes into a planetary picture, you have an increased potential for it to manifest in the world. So Saturn and Admetos, remember, Saturn is contraction, and Admetos is anything that's compact or dense. When these two come together, it represents a standstill. Okay, so the focus on Friday was the economy was shutting down, the world was shutting down. The whole week, the whole focus was the world is shutting down, and that's exactly what this planetary picture suggests. Now, I want to point out this is also a conjunction. So when these two planets come together, they peak, they make a midpoint like this, and the energies really tend to have a peak aspect when that midpoint crosses. This is not something that happens all the time. This is not a fast-moving aspect. This is slow moving. It's a conjunction. It's on the Aries point. I just wanted to point that out, that to me, this is clearly what's happening. I'm trying to get this software upgraded to include these midpoints on the chart. I contacted the developer of this fine software, Alfie. I talked to him, or sent him an email last Friday to see if we can get that midpoint. The reason why I want to track that midpoint is because that midpoint is going to track back and forth across the Aries point. So it's going to go like this, it's going to come back, and then it's going to make a final pass back in November. So what that means is that this is obviously, it makes sense that this is going to kind of meander back and forth. The news of this outbreak is going to kind of die down. It could die down in the summer and then come back in the fall. But the one thing that I want to point out here too with the sun is that there's a good chance that that's a planetary picture of a low in the market. Saturn and Amitos together, that represents the low or the turning point a lot of times. So I want to watch this closely, and hopefully I can get an expansion on that software to get those midpoints. I mean, this is such an incredible software, as you know. Alfie's created this software that's just technologically advanced, and that would just be an addition, and it has been in previous versions of the software. So I think that will be of great help to us. Now, this
well,
is.
If you need any help, I'll call Alfie. He's a good friend, and I know he'll do it for me. So.
For the people out there that I'm not able to do any of these planetary speed index or any of these graphs that I do, the cycles, this is all Alfie's software. So this is really advanced software beyond its time. We're well ahead of its time, like many, many years ahead of its time. But we're fortunate to be able to use this software. So hopefully we can get that, just a little tweak on that. I think will help all of us out. Now, this is the Fear and Greed Index. You can see it's coming off lows. These are historic lows. I don't think it's ever been this low. This is the CNN Fear and Greed Index. So this is indicating some type of a low coming in here. And now I'm just looking at the charts. Now, I know that when you look at the news, it looks like death. And on Friday, you know, that Saturn and Mitos midpoint on the Aries with the sun represents the day something happens. I mean, it seemed like we are never going to get out of this. I mean, when you looked at the news, it had that feeling, that fear of, oh my God, we're never going to get out of this. Look at the economy. And it had that ultimate fear. There were rumors of a shutdown, rumors of the National Guard coming. I have pictures from near my house of the military, the National Guard rolling tanks on railway. I mean, it was looking very dire on Friday, but that has passed now with the sun there, and that midpoint's going to be creeping away. So there's a chance here, I think, that we could be coming into some type of a low, maybe a short-term low, maybe longer. But the call to put ratio, or put to call ratio is right here. Talk about that after the break.
You bet. Thanks, Shane. We'll be right back with Shane Smolyan, wolftrader.com.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smolyan, wolftrader.com. Shane, you want to continue, please? It's very interesting.
Sure, and I just want to tell everybody, you can go to it's wolftraderfutures.com. There's a free member area. I just updated some charts and a video, and the newsletter and the gold package. They're essentially both newsletter services. It's just the gold package. I send the charts daily, so all the Fed use comes daily. The monthly, you get a monthly newsletter, but I do give weekly videos, so you'll still keep up to date on that. Even with the newsletter, you're getting a lot of information. So, and this is an important time, so I'm trying to keep these updated more often for everybody, including the free members too. So if you want to go over there, check it out. Now, the put-to-call ratio 9-to-1. The last low that we had, or the last time we had a big bounce, was about 11-to-1. So it's creeping down there. So just something to watch. I do keep an eye on that. Now, the stimulus, this is not empty gestures. I will just go through this quickly. But the Fed this morning announced that they're going to buy unlimited treasuries and mortgage-backed securities. Now, obviously, I think they had to do that because they purchased $75 billion just on Thursday. And for people that don't realize the numbers here, I watch this daily, and $5 billion is a lot. $10 billion is a very, very high day. In the past, during QE, they did $75 billion. The repo market's up to $1 billion, and they're going to be purchasing corporate and municipal bonds. They have this is what they said. I don't know what this means, but they're going to have Main Street lending windows opening up. And the stimulus package, I would say the package is almost done in the Senate. It got rejected last night, but there's a lot of very, very, very powerful stimulus measures out there. So these can't be completely ignored. So now we'll get to the stuff that everybody probably wants to see, which is the S&P. And we are actually at a low here on the Planetary Speed Index right here. So if you take a look, we're at 322 right here. Now, this is really important because this has been modeling the S&P very well. We had this low into here in 322, and then this rallies up to about 4.6. So I feel that there's a good chance that we're at some type of at least a short-term low right here, and there's a good chance of it. I mean, at least from the Planetary Speed Index. And now the next chart I want to show you is this is the actual S&P daily chart. Now, this Fed juice here, this Fed juice is actually, it interacts with the S&P. So it's the Federal Reserve data that I collect that interacts with the S&P. I had a version 2.0 before that was really getting caught up in a lot of the noise. In other words, it was getting, with these huge volatile moves, it was having more issues. Now the version 3.0 is a lot more stable, and it is just turning up today. There's a good chance that this will go into a buy today. So this will be the first really good opportunity, I think, in a while. If this goes up into a buy and then that Planetary Speed Index is a buy, this is your first really good opportunity to have some type of a bounce here. And according to that Planetary Speed Index, you have until about April the 6th. So if this can turn up, We can get a buy at the close today. You have the potential here for a few weeks of a rally. After that, we'll see. We'll take it day by day. But to me, this shows that those two things combined give you a decent chance here at some type of a bounce. Now, obviously, we're in uncharted waters here with this virus. The economy is essentially shut down. But a lot of times, the market is disconnected from the economy, and this market can turn ahead of the economy. It's very possible. So we just need to watch that. Okay. So, but the things are lined up, I think, at least on the short term, for some type of a bounce. Now, this is another chart here dealing with Fed juice. Now, this is not the Fed juice 3.0. This is the raw Fed juice. And this is daily Fed data that I collect from the Federal Reserve, and I aggregate it here. And you can see in the past that as this Fed juice here rolls, the market rolled with it beautifully. And you can see that in this recent corona decline, the market is somewhat dislocated from it. But the Fed is still increasing the stimulus on a daily basis. They're just persistently increasing it. It's at all-time highs here, higher than any quantitative easing period. And that's important because once these markets calm down, I think they're going to fall right back into the pattern of following what the Fed is doing. The Fed tends to work best when the markets are calm. So when you have this crazy volatility, it's harder for that signal to come through. But the Fed is still there. The Fed is still persistent. The Fed is still making a pledge here, and I track these bond purchases every day too. Now, down here, this is important too. I price the S&P in terms of Fed juice, not dollars, when I want to see a low. Okay, so you see these important lows into here going all the way back. These all marked important rally points in the market where it tended to rally for extended periods after these lows. Now, this has been pushing to lower and lower values on this when you price it in terms of the Fed juice. So we're every day we keep making a new low, which is good. I mean, that's a bullish sign. So we have another new low today. So each day it's pressing lower. So that's a good sign too. You want to see the S&P when priced in terms of Fed juice. You want to see that pressing down to those lower values. So I think that's a good sign. I mean, I combine that with the tape, the Fed juice 3.0 with the planetary speed index. I think that's a pretty good sign, at least on the short term. So hopefully we can get this off the bottom here. I think it's a really bad idea to bet against the United States. I think that we have the brightest minds working on a solution for this. I think we will solve it, and I think we'll come out of this stronger. So I don't think this is an apocalypse or the end of the world, and I think we're gonna come out of this. I mean, there's a lot of possibility. There's 20 companies working on a vaccine, over 20 companies. It's possible that we have partial treatments that we see right now. That there's talk of that. So let's not completely give up on our people here, because I think we're going to find a solution to this, and I think we're going to come out better. Now, this is the weekly Fed juice. This is more raw data. This is weekly aggregate data, and you can see that we're still just continuing to rise and rise on this Fed juice. So at some point, when this market calms down, I think it has a good chance to start to recover here and to go higher. Now, if there was no Fed, like last week, we saw these tremendous purchases by the Fed. All of this stuff into here last week, this would have all been huge declines if the Fed wasn't in there. So that's the problem with the Fed. When they come in, it's hard to understand what's going on. This market would have been way, way down, but the Fed basically stopped that last week. So that's important when we look at this, to understand that when we're doing projections and price projections, that when the Fed's coming in there and meddling with that those might get truncated. So it may look like it's going to extend, but then the Fed comes in and then that's it. It's done with the decline, at least on a short term. So this is a relative strength chart, and I think I showed this before, but in essence, when you have a true panic like in 2008, the tech stocks or the bellwethers tend to outpace the S&P. So this is the S&P here, this is Apple here, and on a relative basis, they tend to outpace to the downside. And when you saw the lows come in March of 2009, you saw the exact opposite. You saw Apple was actually stronger than the S&P when you hit those March 2009 lows. So when we look at right now, we see a similar situation, but we actually see a much stronger situation on Google. Let's say, look at Google here. Look how strong Google is relative to the S&P. So this is the S&P here. this is Google, and this is the relative strength down here. You can see Google is just extremely powerful in relation to the S&P. So that, to me, that's a bullish sign.
Hey, listen, thanks for joining us, my friend, and we'll have you on again soon, and we really appreciate the work you do for us. So may God bless and keep that family safe, okay?
Thanks, Larry. You too. Take care. Stay safe, everybody.
Stay indoors. Stay indoors. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's remember that no matter what happens, we're going to come out of this really much better, because that which doesn't destroy you makes you stronger. So we want to keep that in mind. Now, just want to remind you what's happened here over these last few days here in the stock market. I'm going to bring this up. This comes from one of the hedge fund guys. I'm not sure which one, but the 3 of the 10 worst days in the S&P's history have occurred in the past week. That's unbelievable, isn't it, folks? And 3 of the 5 largest gaps down have come in the past week. So something major has happened in here. We need to pay very close attention to that, because it is telling a story. And if you believe in charts and you follow the patterns and things, it's trying to give you an idea that, yes, there's something out there that we've not seen before. But I think no matter what happens, we're going to be able to meander our way through it. Today's high in the S&P at 23. 380 was the exact 61% retracement of the high that we made Friday. And of course, we closed right on its low. We opened down the limit and we bounced off and we rallied back up. And the worst thing you don't want to have happen today is to see the market fail and start to go down, because that means that the Fed threw a lot of bullets and the bullets went over everybody's head. And that's not a good sign. So keep that in mind also. As I mentioned earlier, we're going to do our best to have Stan Harley as our guest this week, and we'll be happy to have him on, as he's always a good people to talk to. I spoke with Bill Meridian this morning, and he is still negative to the stocks and is looking for lower prices still, somewhere around the 2,000 level in the S&P in a few weeks or less. So that's what we're keeping an eye on. So those are just a few things that we're looking at here. And we'll do one thing at a time, as we always do, and live every day in an attitude of gratitude, and may God bless. And keep those cards and letters coming in, folks.